All right, welcome back. The Investment Committee is answering your questions. Let's kick it off with a video question.
My question is to Jim Levinthal about Qualcomm. I'm wondering, what does he think about the stock, given that the growth rate has been pretty high, like 60-70% earnings growth, and they are transitioning very well to IoT, and 5G, I would say, is also pretty hot now. So despite all these positivity tailwinds, why the stock is so cheap, and what do you think about it for next year?
Farmer Jim, what do you say?
Yeah, I love his question because it kind of has the answer in there when he talks about Internet of Things. The big deal with Qualcomm is the multiple is going to expand over the next year as their diversification away from handsets into Internet of Things and also into automotive continues. So this is a stock that has been cheap at around 15, 16 times earnings. It should be 20 times earnings. It should be above $200 right now. And next summer, when it's looking forward into the fiscal 2023 year, it should be at 230. So that's a good 25% rise over the next 6 months as they diversify.
All right, let's go to one more of those video questions.
Hey, Josh, it's Scott from New Jersey, and I just wanted to get your thoughts on Uber. I know you've been a long-term shareholder of the stock, and I wanted to start my own position in Uber, but I wasn't sure if now would be a good time to do so with COVID spiking and the fall and winter months coming up, which could present an issue for the stock and the company. So just wanted to get your thoughts. Thank you so much.
Yeah, really good question there, Downtown.
So paradoxically, the spike in cases, if that's what you think is going to happen, which the jury's still out how much longer this will go on for. It's already, Omicron cases are already crashing in South Africa. But let's say that's the premise. More than half of Uber's business right now is Uber Eats, which actually works in the favor of that part of the company. So Uber has set itself up in a very interesting way. They kind of win either way. I don't think Wall Street gets that yet, which is why the stock is 44 rather than 64. But I actually own it because I do think we are going to get our lives back and that the Uber rides component will become bigger, more important. And wait till autonomous driving comes along. Then you'll see the take rate for the Uber ride segment, even if that's not for 3 or 4 years, truly explode higher. So I'm a long-term Uber shareholder, no plans to trade it. Don't know if the timing is perfect here, but I would not be afraid to pull the trigger in the mid-40s.
An optimistic Josh Brown. Over to Brenda. John in Kansas writes, I own Visa and PayPal. Should I hold, sell, or add these?
So the payment processing group has really been very disappointing this year in terms of the overall performance of stocks. It was once such a loved group, but I think as we look to next year and as investors are trimming their winners from this year and looking for a really strong fundamental group that hasn't participated as much in the rally, this could be a group they look to. In part with Visa, as we look at an increase in cross-border transactions that's likely next year and an increase in travel, that should certainly help the company. With PayPal, there's been an expectations reset here, but PayPal remains one of the fastest growing, most innovative companies within this group. And next year, there is a catalyst early in the year with the launch of Venmo as a payment option on Amazon, which we think should be incredibly good for that part of their business. So I think fundamentals are still strong here. We would look to potentially add to this group, and especially in the new year, we think investors will take another look at it.